First, let's get into our stock of the day. It is based on the stocks making news today, given we are in reporting season. Telix Pharmaceuticals is in the spotlight, and the biopharmaceutical company posting a full year net loss of $5.3 million US. Revenue for the year rose 56% to just under $804 million US, surpassing guidance. It is guiding to near $1 billion US in revenue next year, and the non-material loss included $26.7 million in non-cash finance costs following the acquisition of RLS Radiopharmaceuticals. And Chief Executive Dr. Christian Berenbruck saying vertical integration and regulatory milestones are now front and centre for the business as it expands globally. So let's, and you can see there that it's one of those stocks that, well, you're either a winner or a loser. You're winning, you're doing well because the market rewards you handsomely in this current period, and that's been the case with TLX. So, Thomas, let's start with you, and interested to know what the technicals are telling you as well.
Yeah, so TLX has been one of those stocks that's had a lot of, I guess you would say, weakness in it for quite some time. It's fallen all the way down to a very important level that we can see on the charts, and it's all about, I think, volume in this case. So basically, when we take a look at this stock, it's been falling for a long time, but just recently we've seen an uptick in the amount of transactions actually going through the stock. And that's always important because when we do look at the transactions through a stock, we can always say that there's usually a mixture of buyers and a mixture of sellers. The beautiful thing about markets is there's always two sides to the story. So in this case, we are actually seeing volume uptick, and it's actually above its general averages by quite a lot. And it's also hit a pretty important level in around $8.50, and that's where we've seen this buy come in through the earnings. So it's the first earnings in a while where we've seen a little bit of surprise. And that's causing a slight bid. I think you've always got to be careful. I have a saying, and that saying is that if you have a freight train coming down, then you usually need a bit of market structure to actually solidify a base pattern, and this certainly has been a bit of a freight train coming down. So for me, some of the levels to watch in the future, $11 kind of 85. If we break above that, I think that the market is starting to recover. And we've got to remember only 12 months ago, this stock was sitting at $28. So it has been quite a big decline. But I do like what we're starting to see on the charts, and viewers will see there the arrow down to the volume, and that is where we're starting to see the activity. So that means somebody believes and somebody maybe doesn't, but that's always a good thing, a good sign of the beginnings of formation. So I like that component.
Okay, so to the point, do you believe enough? Would you buy it at these levels then?
I think it would be, well, I don't know. Some people would scale in and look at it as a buy, but I think it's too early to tell. But if it does break that 1180, I think you would be considering it as a buy potential.
Right, so I'll call that a hold with a watch potential.
Hold, yeah.
A potential to buy. All right, David, how are you seeing it?
Yeah, we're a bit more positive on it. We like the business and think that it is an excellent business going forward. They have a lot of really good products that will hit the market, and I guess you look at the result today and you think, well, the company's recorded a loss. How does the share price go up? Well, it's really the fact that they are investing heavily into research and development, and also into a lot of their new therapeutics. So the company has forecast that they'll spend around $200 to $240 million on R&D in the next 12 months. And it really is a bit of an investment phase for Telix Pharmaceutical. And we think that over the next 12 to 18 months, they'll really get a ramp up in their sales. Management have actually guided towards revenue of around $950 to $970 million for financial year 26. So we think they're in a really good phase. We'll hopefully get to profitability in financial year 27. So it is a business that is investing. Obviously, being in biotech, they need to invest a lot of money, but we think that payoff from that investment will come over the next 12 to 18 months. So we like it. We have liked it for a while, and as we've seen, the share price is down quite a bit, but we think that there is a reasonable amount of upside from here, and I suppose encouraged by the talk about the the recovery in the share price as well. So our target price is 22.60. We've got a buy recommendation on it and think that current levels it looks pretty attractive.
All right, you are seeing significant upside then. So
yeah, absolutely.
Yeah, okay, given where the share price is now, more than double. So that is a buy from you and a hold from Thomas, but potentially looking to buy. That is our stock of the day. TLX